Joining us now to talk about the proposed listing of the Vunani Property Investment Fund is Butana Khoza, Managing Director at Vunani Limited. Butana, thank you so much for joining us today. Much appreciated. Of course, now Vunani has retracted the cautionary and news out that we're looking at the property segment of Vunani now being a separate entity. You haven't really come out with a date as yet. Let's start off with that. When do you hope to bring this to the market?
Elena, thanks very much for having me. I think the first thing it bears saying is that, and just to caution that the listing is still subject to JSE approval, so we're going through those processes at the moment. But subject to those approvals taking place in the scheduled timeframes, we expect that it should happen around about the first week of August.
Okay, so imminently, in other words. We were looking at three property assets of around 120 million rand plus added all together. Looking at the cash that you are planning to raise, essentially there's two sections to it because you do hope to raise around 500 million rand or so, also 60 million rand tabled at this point in time to try and pay off some of the debt. Tell us about the book building process.
Okay, from a book building process, effectively there are two stages to the transaction. The first, as you correctly mentioned, is the sale of assets which are directly owned by Vunani Limited into VPIF, Vunani Property Investment Fund, of which Vunani has an effective 39% interest. The balance of those shares being held by management and at this particular stage. The total listing effectively of Vunani will place the total fund at around just under 1,980 million rand. And Vunani, the current portfolio, has a loan to book value of about 40%. So essentially the listing is about raising fresh capital to repay around 497 million of debt directly in the fund, and an additional 60 million rand to pay back debt associated with the properties that Vunani is selling. So the fund effectively will be debt free pretty much at listing. And Vunani will then hold units in that particular fund.
With regards to the biggest asset post-listing, is the biggest portion going to be cash or is it going to be assets,
it's going to
property?
It will be assets, direct property assets.
And with regards to growth going forward, because you are still sitting in a very strong cash position, is it going to be acquiring properties? Is that going to be your strategy, or will it be about development and new developments coming to the fore?
Essentially, it's not a fund that really does development per se. Vunani's other business is a development business. Naturally, I think it does create opportunities for the fund in terms of having the right of first refusal on developments that Vunani has been doing in the future. But predominantly, I think that we would like to see in the short to medium term VPIF being a consolidation vehicle for relatively smaller property funds. And so we would like to think that a pipeline of, in the short to medium term, say 600 million additional properties through either mergers and acquisitions taking place with that fund being the kind of size that we'd like to do. Obviously, we've got a long-term growth objective, which is to create a decent sized fund.
And we've actually seen this new trend coming to the fore, in fact, where we have seen quite a lot of funds coming to market. Can we assume this is going to be main board listing?
It will be main board listing, I think, under the property sector. And it is, I think, one thing that bears saying, a focused office or commercial property portfolio. 92% of the portfolio is actually commercial, with about 8% retail. So I think from an analysis, it probably is one of, if not the most focused commercial properties in that sector.
With regards to the impact on Vunani, and also looking at some of the numbers with regards to the previous results that you released, 88.7 million rand profit is what Vunani is going to be losing, essentially, because it's spinning off the property side of things. And we're looking at 276 million rand in assets now moving to the property fund. Where does that leave Vunani?
Okay, this is a vehicle that we've consolidated. Naturally, we had, through the Vunani properties, over 50% of the shareholding in that particular vehicle, so we used to consolidate it. What it does is that our revenue line will probably shrink by some 120 million, but the other side of it is that we will actually shave about 55 million rands worth of expenses off our expense line. I think more importantly, our finance costs shrink by about just under 80 million rand. And so from that perspective, I think if you look at all in all, the profits or that result out of the transaction that we will do on the sale of our properties, on our operating profits, there's a slight decline, about 10 million rand, but we make that up really in distributions which we receive of about another 10 million rand. So I think if you look at the impact of the transaction, it's relatively flat, which is why if you look at the impact on the headline earnings, it's actually quite marginal. I think there's about an 18% or thereabout change.
With regards to the final subscription price, we're looking at between 7 and 8 rand per VPIF unit.
Yeah.
How's that going to impact the overall market cap of the new entity? Is it going to be a couple of 100 million rand that we're looking at with regards to market cap? What have you priced in?
Look, I think market cap is really a factor of where the units trade. As I say, we've given a range, and it's a guidance at this particular stage, excuse me. And I think we're saying 7 to 8. It equates to around between a 9 and a 9.8% yield on that on those units. We don't think that it is aggressively priced, but that's the market. It's for the market to decide. We think that it should equate to around about, as I said, a 980 million rand market cap, just under 1 billion rand.